Hey everyone, welcome back to Weekly Market Outlook. This is for the 19th of August 2024. Let's get this started with what's going on last week, and we do definitely want to focus on the Wednesday. So a lot of stuff happening on Wednesday there. We have the surprise rate cut coming up from the RBNZ, and then we have the UK inflation number bouncing up from 2% to 2.2%, but it is still below consensus of 2.3%. And definitely something to talk about is the US inflation number. Now, the US inflation number, headline inflation number dropped from 3% to 2.9%. We do have a little bit of a mixed data here in terms of the number that's coming out. Overall, the headline inflation number drops. The core CPI also drops. Monthly growth as per consensus. The concern here is obviously that it's not dropping down as quickly as it should, but still, I guess it is a little bit of a relief for the market there. Not a lot of volatility, which is good. We were expecting the worst to happen last Wednesday. Not a lot of volatility. No matter how small that drop is in inflation number, it is still a drop in inflation. So that kind of gives the green light for the FOMC to start cutting interest rates down, which is likely going to be in the September meeting. Now, obviously, the concern last Wednesday was that, what if inflation shoots up or picks up again in the US? Obviously, that's going to cause a lot of problem to the market, and that's a good thing that we didn't see a lot of volatility in the market. There was a little bit of a pause on Wednesday and Thursday in the market, but generally, we do see the rest of the numbers coming up for the week there. Overall, we do have a good number, US retail sales number, which is still good. And also we have that drop in unemployment claims in the US, which is also good, brings in a little bit more stability and a little bit more risk to the market there. UK retail sales number, definitely an improvement as well. Negative 0.9% was revised up. We got 0.5 below the consensus of 0.6%, but nevertheless, it's still a good gain for the UK retail sales number. Brings in a lot of the positive sentiment back on Friday. All right, so for this week, a couple of things to note here. We have the Canadian numbers. Obviously, we have the Canadian inflation number, and then we have the retail sales number from Canada. But this week, a lot of the focus is definitely going to be on Wednesday and Thursday. And on Thursday, if you're in Australia, then we have the FOMC meeting minutes early in the morning there. But that's going to be released on Wednesday in the US. And then we also have the Jackson Hole Symposium, which is a very important meeting for the Fed there. That's going to start from Thursday all the way to Saturday. We're expecting Jerome Powell to provide us with a little bit of an insight into what their September rate cut is likely going to be. So market is anticipating that speech there, which is going to be on Friday, in terms of whether or not the market is going to get a 25 basis points cut, or is it going to be a 50 basis points cut for the September meeting there. But that's pretty much it for this week. Apart from Friday, we're not really expecting too much going on to the market, so we can rely a little bit on the technical side of things. Now, with the risk coming back into the market here, we can see the Aussie USD, the Euro USD, the Pound USD all pretty much gain. So for now, we do expect the US dollar to be a little bit on the weaker side. We just had a little bit of a breakout to the downside on the dollar index here. So one more resistance for the Aussie here, which is to take over that 67 cents. Once the market is able to claim 67 cents, then we do expect the Aussie to be traded between 67 to 68 cents for this week. The Euro USD here, I think we do see that turnaround in terms of the correction here. We saw price breaking above that 1.10, really approaching that 1.105, and then immediately retreating itself to test for support, which is at 1.0950. So it is safe to say right now for the Euro USD, it has found support at 1.0950, and that's a good thing, because if it has retraced a little bit lower to 1.09, then we might actually lose a lot of the momentum here for the Euro USD. So Euro USD currently on track to test 1.05, and should it able to overcome 1.105, then the next target is going to be at 1.11 for the Euro USD. The Pound USD has also broken through the key resistance to watch out for, which is at 1.2850 last week. We saw that clean break on Friday. Right now, price is testing the 78.6% Fibonacci retracement, which is located at 1.2963, but I think the main resistance would still come at 1.3. Now breaking above 1.3, that opens up further gains for the pound USD towards 1.3050, 1.31, and 1.3150. So risk sentiment is definitely still positive. We can see that gain on the pound USD here, and you can see from the momentum here, we do see stochastics picking up here a little bit. The RSI is also punching through above 60. So this could be an early indication that, yeah, the uptrend could continue for the pound USD. Therefore, a lot of traders are likely going to be targeting that 127.2% at around 1.3150 on the pound USD. Lastly, we have the dollar Japanese yen. Last week we saw that retracement happen. So for the past 2 weeks, we saw that retracement happen on the US dollar here. But that retracement, as I said, it was likely going to be very limited. It's likely going to be very limited, even though it breaks above 148. It's likely going to be limited at 150, and that's basically what we saw last week. We saw that turnaround on the US dollar here last Friday, and at time of recording, price is actually closer to 146.50. We have one more key support range to break, which is 145, 146. Once we go below 145, then it's going to be a strong confirmation that sellers, the yen buyers are still in the market. Dollar yen, euro yen, sterling yen is likely going to be pressured even lower. So we do expect a scenario where we anticipate a weaker US dollar with a stronger yen to still be in play. No carry trades has been identified. I don't think long-term position traders are coming back into the market to pick the dollar Japanese yen at the current price level. In fact, we still have that resistance at 148 and 150, still capping the progress on the dollar Japanese yen, limiting the correction that has happened on the US dollar. And right now, I think we are just anticipating a little bit more on the resumption on the US dollar yen trend to the downside for this week. With that, good luck with your trades, and I'll see you soon.